Hi, folks. This is Lee, and I'm giving you the market sense for the week of January 15th. Tax time. Yuck. 2019, and the charts in this presentation are provided to us by Gettess and the Trade Navigator software. And we are looking at a weekly bond market chart here, and that is a pretty doggone impressive move there, don't you think? Since this big run up, they had a little consolidation week, and this week has stayed inside of that week so far and could continue to consolidate. That would be no big deal. I'm a little surprised that the 146.05 area, the middle moving average, seems to be acting as resistance this week. I kind of thought they might make it back up to 47.16 or so up in this area. The fact that this is held makes this support here, which is, let's call it 144.28 to 44.20, right in that area. It makes that kind of important because if they hold there, they will still look pretty doggone good. That will be holding above these old swing highs from back here at the end of last year, and that would still look like a very healthy market. Now, they could break this and they could go a long ways lower. I mean, gosh, if they go down to the Keltner channel, mid-Keltner channel here is almost to 142, that still wouldn't look bad. I mean, just the size of this run up means they've got plenty of room to dump without it being a huge retracement. So, but if they don't hold the 44.20 to 28 area here, they could go substantially lower, and I mean like 2-3 points lower this week. I don't really expect that. I don't know if there'd be anything to drive it this week, but they could, and it's just a matter of do they hold in this area? Because if they do, that would be pretty positive. I would definitely look for a chance to buy them for a chance to test this high here. Moving on to stocks. We have a very naked looking low down here, don't we? I mean, that just looks lonely down there. And they've come back up nicely off of it, but let me give you the negatives. Each bar is getting progressively smaller so far, and the rally back has only taken them to the lows that they broke down from, so there's nothing really exciting here yet. This could be a low. In fact, it looks like a low, and I'm don't mean to suggest that there's something wrong with this. There isn't. But it's so naked looking. Lows tend not to come in like this very often. We're looking for some sort of retest of that low. It might be a full retest all the way down to it or through it, but at the very least they should back off to some degree. Now we're looking at resistance at 26.22 this week, and if they hold support, which is a 25.50 area, 25.50 to 55 here at the upper moving average, well, like with the bonds, that would be very impressive, and maybe that is just the low and they're just bonging right back up there. I think it's a little more likely that we see them down 25.06 at the middle moving average, and really I would rather see them down in the 24.25 area down here at the lower moving average. Now, when I would say a retest, that doesn't have to happen this week. This could be a gentle rollover that takes several weeks. But I am really hesitant to assume they're just heading right back up here. I think if we get good news from China, like they've come to a trade agreement and everything's hunky-dory, well, they could explode from there. But if they don't get that, even if the government shutdown is over, I still kind of think some sort of rollover down to some form of support to at least try to retest this low is likely. So that's what we've got for you today. I hope you can find something profitable to get